Good evening, Garage Gang. It's Monday night, January 5, 2026, and I'm sitting in the captain's chair with the whole garage under my control. Tonight felt like the market was driving with one hand on the wheel and the other hand slapping the radio, trying to find the station that plays New Year Rally without the commercial break called reality. Because here's what hit the wire today. Geopolitics lit up like a check engine light. Venezuela is still the headline weight in the trunk, and oil traders are treating it like a live grenade. At the same time, the market's acting almost disrespectful about it. Stocks shrug, crypto rips, and volatility stays calm like it didn't read the news. That's not bravery, that's structure, that's the machinery of markets doing what it does until it can't. And while the world is arguing about politics and oil, the real story is this. The plumbing is still pushing fuel. The system is still in a reflationary posture. Liquidity conditions improving even with noise because the money has somewhere to go and it's starting to move again. When liquidity expands, risk assets start acting like they just got fresh tires and a full tank, not because everyone is suddenly a genius, because the track got stickier. Crypto felt that today. Bitcoin is hanging in that tight lane where every move matters. You've got a big psychological and mechanical fight right around 92,000. Think of it like a choke point on a mountain road, too many cars trying to pass at once. If we clear it with authority, you don't get a gentle cruise upward. You get a dealer scramble, because sitting above that zone is a call wall. And if price starts pushing through it, the people who sold those calls have to buy spot to hedge. That's not an opinion. That's forced buying. That's a turbo spool. And the map gets even cleaner when you look at the liquidation magnets. There's a dense upside pocket of trapped shorts sitting between 93,700 and 94,500. If Bitcoin drives into that zone, it can trigger forced buybacks, short covering like a chain reaction on the freeway. On the flip side, the pain threshold for late longs sits down around 88,000 to 88,500. That's where the stop losses live. That's where the market likes to wick, shake the weak hands out of the seat, fill bigger orders, and then keep driving. So the next 48 hours are not about vibes. They're about whether the market hunts liquidity down first or squeezes liquidity up first. Now layer in the institutional piece because it matters. Spot Bitcoin ETFs are showing net inflows again. And we've got the classic tension. Flows look constructive while price is still consolidating. That's a contradiction you respect, not ignore. Sometimes it means absorption before a move. Sometimes it means the market is distributing into the bid. Same dashboard, two different realities. That's why we watch what price does at the choke point. The market tells the truth at the level. While Bitcoin is playing the main table, XRP walked in like it owns the casino. Big pop on the day, and the narrative is screaming supply squeeze. Exchange balance is being drawn down, people whispering structural supply shock, and the crowd getting that wide-eyed look like they just saw a jackpot sign flicker. Here's the adult truth. Supply tightening can be real, but supply tightening alone doesn't pay you. Demand is the match. If demand shows up, a thin float can move violently. If demand doesn't show, supply shock becomes a bedtime story told to bag holders in the dark. And with XRP specifically, the data set itself is fragmented depending on where you pull it from, which means the story can be true and still be mismeasured. That's why we treat it like a high octane build. Powerful, but you don't floor it until the gauges are confirmed. Now let's talk about the part most people miss, because this is where the garage separates itself from the tourists. On the surface, social media is screaming, whales are accumulating. Under the hood, a lot of that signal is exchange, wallet, housekeeping, consolidation, reshuffling, internal movements that look like buying if you're staring at the wrong dashboard. That matters because fake accumulation signals turn smart people into emotional people. You start buying because you think the big guys are buying when the big guys are just moving inventory from one shelf to another. So we keep our eyes on what's actually shrinking. Liquid supply on exchanges and whether real demand is absorbing it. Now zoom out to TradFi for a second, because crypto doesn't live on an island, it just pretends it does. The S&P is still sitting in a stability zone where dealers suppress volatility. It's like you're driving on a track with traction control still on, but there's a line in the sand. Around 6,725 on the S&P is a mechanical tripwire for trend following autopilot systems. If that breaks, the autopilot bid can flip into mechanical selling regardless of how anyone feels about earnings or headlines. So yes, the market is calm, but it's calm with a cliff nearby. That's why you don't get cocky. You get precise. And while everyone's watching price candles, the real narrative engine is happening in Las Vegas CES. This human operating system theme is basically the convergence of AI, robotics, and crypto rails. AI agents need a payment rail, they need verification, they need coordination. You don't have to worship it, but you do have to respect the direction of travel. When the world starts wiring autonomous software into the physical economy, the pipes that move, value, and verify actions become strategic infrastructure. That's why you keep hearing the same names show up in the conversation. Execution layers, decentralized compute, depend. It's not because Twitter discovered a new religion. It's because the world is building a new factory, and those are the bolts. And this is also where the AI power storyline gets serious. Data centers don't run on optimism. They run on electricity, always on, 24/7. That's why the power trade and the utilities trade and the upstream uranium and nuclear trade keep showing up in the same sentence. AI is not just software anymore, it's an industrial load. Now let's bring it back to your money, because this is not a bedtime story channel, this is the garage. Tonight's tactical landmine is tokenomics. There's a big unlock scheduled for Ondo on January 18th. 1.94 billion tokens. That is a massive supply event. I don't care how pretty the car looks in the showroom. If the tire is flat on the 18th, you don't pretend it's fine on the 17th. Mechanically, that kind of supply inflation can crush price. So the discipline play is simple. Avoid it into the unlock window or hedge it if you're married to it, and then look for the post-event dip when the forced selling exhausts itself. That's not bearish, that's professional. Now the trench, the microcap casino, the part of the market where you can make a month's income in a day or lose a week's sleep in 15 minutes. Solana's Zombie Hunter scan is telling a clean story. The classic ATH, deep pullback, base revival patterns are mostly living under the 1 million market cap line. The ones above the 1 million gate tend to either be already flying or they're mature and not behaving like zombies. So what do we do with that? We don't get emotional, we tighten our rules. If you keep the 1 million market cap rule, you're basically saying, I want survivors with a real chassis. That means fewer picks, less rug risk, more boredom. If you loosen it to the 500,000 to 1 million range, you'll see more zombies, but you're also stepping into thinner liquidity and faster traps. That's a choice, not a vibe, a choice. And tonight, two names popped in that near the line zone, HODL and Poly. HODL has the cleaner structure, the heavier activity, the stronger revival look, but it's lighter on the full community stack. Poly has stronger community infrastructure and retail activity, but a messier chart. That's how it always is. The cleanest chart rarely has the cleanest fundamentals in meme land, which is why position sizing and exits matter more than your feelings. If you can't define the invalidation, you don't deserve the entry. Now it's time for Lulu, head of technical analysis. Yes, Lulu is a pig, and yes, she's still better at reading a chart than most of the internet. Lulu's read is simple, and it's built on if-then logic, not hope. If Bitcoin holds above 92,000 and starts pushing into that 93,700 to 94,500 pocket, you're likely watching the beginning of a squeeze sequence. Dealers hedging, shorts covering, price accelerating toward the round number gravity near 100,000. If Bitcoin fails at 92,000 and momentum stalls, you watch for the wick. The market loves to reach down into the 88,000 to 88,500 zone, knock the late longs off the bike, and then ride away with their lunch money. If we see that sweep and reclaim quickly, that's often where the real trend resumes. If we break and hold under that zone, the structure changes and you stop pretending it didn't. And for equities, Lulu says the same thing in barnyard language. If the S&P holds above 6,725, the autopilot stays on and dips get bought. If it breaks, the same machines that made the market feel safe can turn into the same machines that make it feel violent. Lulu calls that the moment the track goes from rubber to ice. Now, quick disclaimer, because I know somebody out there is going to do something insane and then blame the internet. This is not financial advice. This is education and entertainment. And if you take trading advice from a pig in a garage, that's between you, Lulu, and whatever higher power is responsible for your decision making. So here's the bottom line tonight. The chassis is strong. Liquidity is improving. Institutional flows are sniffing around again. Crypto is sitting at a mechanical decision point where force flows can create violent moves. XRP is hot, but the supply narrative needs demand confirmation and clean data to be treated like more than a story. AI is not a side quest. It's the industrial backbone being installed in real time, and the market is rotating around that gravity. And the biggest near-term trap is still tokenomics. Don't get cute into giant unlock events and pretend narrative beats math. If you want this nightly dominance recap every single night, you know what to do. Like the video, subscribe, hit the bell, and if you want the full write-up and the levels we're watching, you'll find it on the website with the Garage Outlook ready to paste and share. We've got the keys, we've got the map, we've got the discipline, let it rip.